everyone, welcome to the Road to the Millionaire Retirement. My name is Andrew and thank you for checking out this channel and this video. So in this video, I want to talk about why I got into a stock market and why I recommend people, maybe any viewer watching this, should also get into a stock market. So first, when I started investing back in 2016, I didn't know much about investing in general. All I know was that, I have a very close friend that was investing in stock market for a couple years prior to me investing. And I would see him check stock market and whatnot, and I would just ask him about it. So that kind of got me intrigued, and over time, I learned that as the stock market or your choice in stock market company grow and better perform, that you're investing money in that company grow. So I'm like, okay, that's not bad. I mean, considering how the company, at least big company or like popular company, I guess, usually tend to grow bigger. The ideal that if I put money into this company and if it grow bigger, my money is gonna grow bigger. So well, that's not much a big brainer. So fortunately, 2016 it was in the middle of the bull decade, because considering the last time the market crash was back in 2000 and 2009, we had like several year bullish run. So the stock market was in a great, I would say, position. So I guess I was fortunate in the sense that even after I started investing in 2016, the stock market continued to run bullish until even right now, 2021. I know we had a COVID crash or COVID dip in 2020, but I don't think that was a big deal because within a couple months, stock market in general recovered, and not only did they recover, they kind of suppressed they went above and broke the all-time high record. So, because like back in 2008 and 2009, I believe the crash, obviously lasted for like 2 years or so. And prior to that, it was 2000 dot-com bubble. I think that lasted for a year, I believe. And so, these big major crashes happen for much longer duration. And because now most investor, especially like millennium, we haven't had that long duration of crash. I don't know how it's gonna affect us if or when that crashes happen because crashes is bound to happen. I guess it's in a way that the stock market kind of balances itself, I guess, from what I hear from other people, because you can't just have bullish run for decades without ever going down. There's a way that the stock market correct itself. Back in 2008 and 9, that was the whole house market financial bubble burst, I guess. I think that's what it was. And 2000 dot-com was, I think it was related to the technology burst or whatnot. So there's something to trigger. But anyway, so going back to the topic, I saw that there was a chance, and because it was a new environment, it was a new area for me. Like I didn't want to invest, I didn't want to throw in too much money in the beginning. By the way, if you guys are new to investing, I will post a link, or I will put a link on the description about a guide or tips for beginners investor. If you're a new beginner that's about to invest, I'll link up. I'll post the link in the description, so definitely check that out. I believe it will help you guys, any new investor, greatly. So anyway, going back into subject, because I was new, I didn't want to throw in too much money, so I said, you know what? Let's put in $1,000 and see how that goes. Because $1,000 is something that I'm willing to risk, and if I lose it, at least it was good experience. But I had to make sure that I was smart investing, that I wasn't gonna be doing all this YOLO risk and invest all in some high risk, high reward. No, I mean, this was beginning. This is something that I was very serious about. So I wanted to make sure that I took it slow and learn as I go, because the most important thing about this was that I had to learn about the stock market. So fortunately, well, I guess it's not fortunately, unfortunately for that first, I think it was about that first month. I think the first month of January in 2016, that $1,000 turned out negative. I think I went as like low as 900, 800. So like as a new investor that just got into stock market, my mind was like, oh man, I don't know if this is the right thing for me. I don't know if I could do this. My emotion was kind of like all over the place. Like I don't know if I can continue to do this. What if I lose $1,000? But fortunately, this is where it comes. Like I decided to just wait it out. You know, it was only 1 month, and I'm gonna wait and see if I could really be patient and try to invest smart, study more about the company, so that way I could invest smarter. And at the end of 2016, I believe my return for that year was 59%. That's insanely high amount, considering that it was my first year. Also, because it was my first year, it wasn't a lot of money. I mean, because if I were to get 50% or 50, like almost 60% of my current balance or current portfolio amount, which is $100,000, I'll be sitting at $150,000 end of the year, and that would be just dream come true, or 159, I believe. Anyway, 50 around almost 60% return on the first year, and I was just extremely happy because I think with almost $6,000 invest, that pushed me to $10,000, and I was like, wow, I can do this. I can do this. I just need to make sure that I learn from the first month about being patient, about not being emotional, and about not freaking out. But more importantly, I had to make sure that I invest into a smart investment company. Like I can't be doing YOLOing. I can't be doing high risk, high reward. At least not yet, because I don't have that much amount of money to play that kind of risk. So throughout 2016, 2017 and 2018, 2019, and until right now, there were times that where my emotions still take hold of me, and I'm like, oh man, I'm losing a lot of money, and it just get emotional. Like I think the most amount of money that I lost in a single month was, I think it was 2020, back in when the COVID happened, and I lost $7,000. I was like, wow, that's $7,000. That's a lot of money. That's the amount of money that you could put down for the down payment for a new car, or that it's the amount of money that you could basically pay off an old car, maybe from like another third person. So I get all these different ideas that come to my head, and it make me want to make a rash decision. But I mean, like I said from the beginning in 2016, I kind of learned to control my emotion better, try not to make stupid mistake that would, result me into losing more money. Unfortunately, I think 2020 my return was around 30 something percent. Which isn't a lot, I think, compared to other people, other investors, because I think they make a lot more percentage return than a simple 30%. I believe that if you're an investor, the one thing that I don't think you should do is comparing yourself to other people. I think that is very I think that's gonna affect you negatively, because you're gonna be like, I can't make that kind of return. I must be doing something wrong, so I have to do something more riskier. And I believe that mistake could cost you a lot of money. So you have to you have to only care about your portfolio, and you have to only be concerned about what you're investing. If other people are making 100% return while you're making 50% or 25% or even 10%, you have to accept and be happy that you made a positive return, because there are people out there that make high risk and high reward and they lose a lot of money. I'm somewhat active Reddit user, and there, in the subreddit that I follow, that the user posts the amount of money they lost, and it just kind of blows my mind, because especially with this whole GameStop meme era going on, I call it. People do a lot of high risk option trade, and some people lose $1,000 to $10,000, and I'm just thinking, wow, there are a lot of people that post a positive thousands and $10,000 worth of gain, but there are also a lot of people that has lost that amount of money. So, you can't be like, so when I look at those gains of other people that made like thousands and $10,000, and I'm like, you know what? Good for you. You made a investment choice, whether that was risky or not, and you paid off. Congratulations. Me, I made some profit, and as long as I am making some good amount of profit, I'm satisfied with that. I don't have to try to compete with other people that made like over 100% of gain in option trade or regular stock, because they made that risk, they made that choice, and sometimes they get lucky and their luck and their calculation paid off. Sometimes they don't. So if you guys are new investors, don't compare yourself to the other investor of how they're doing. You have to do you. You gotta worry about your own portfolio and go slowly by your own comfortable pace. Now, I recommend people to invest in general because there is a great potential of making money in stock market. And like I said throughout this entire video and other videos too, you have to make smart decision about what you're investing in. You can't just invest risky and expect some high reward. This isn't some, stock market is not like automatic win where you just throw money in and you get more money back. That's not usually how it is. It's all about like where you put that money and expect to grow, because you have confidence that the company that you invest in is gonna make you that returns of money. And it's not easy to just get into stock market because with the stock market comes the downside, that emotional anxiety, because there are gonna be a time when you lose money and you're gonna your emotion is gonna take hold of you. I read some of the posts on the subreddit, and there are times when people are having a hard time going to sleep because of their money going down the drain with the stock market. And I also had a coworker who got into stock market during the GameStop meme era, that he was having a hard time going to sleep with the whole GameStop share that he owned because of how crazy the stock market was at that time. So there is definitely a downside for stock market. It could really take hold of your life and your emotion, and it could really bring you like negative, and it could even hurt you. So I guess in a way, stock market is not for everybody. But I believe that anybody can do stock market. You have to do it slow, you have to do it small, and you have to learn as you are going deeper into stock market. You don't have to be, I don't feel like you have to be professional to be great at stock market. Like for me, I don't consider myself a great investor in general. Like I don't have that whole Ford monitor with the stock market graph going everywhere and see what is going on in the stock market from minute to minute, because that is like another level of investor. That's like another whole category of stock market investor. These are the people that invest and buy and sell like daily. For me, I'm not like that. I don't buy and sell daily. I'm a long-term investor, which means that I usually pick a stock that I believe that is gonna do well for long term, whether that's 1 year or 5 year or 10 year or longer than that. So for me, I don't consider myself like, I don't think I had to commit to stock market to that degree as other investor like they do with day to day, because you had to, I guess, decide what kind of investor you want to be. Do you want to be a day to day? So bottom line, I guess what I'm trying to say is that if you guys have thought about stock market, then you obviously have a sunk interest in stock market, and I would recommend just start small. Depending on which brokerage you are investing, you could buy a fraction share, which means you don't have to spend an entire whole share. For example, right now I believe Microsoft is 230 something. If you don't have that much amount of money to buy one share of Microsoft, there are some brokerages that could get you like maybe half of one share for half the price. So that way you don't have to commit that much amount of money. I don't exactly know which brokerages offer the fraction share, but they are out there, and you just have to research and see which brokerage fits for you the best. So if $100 is all you can do, and you want to spend 10% of $100 in Microsoft to get 10% of 234 whatever amount of Microsoft is, then start small. That way you guys get an idea like, okay, so the stock market is going up or stock market is going down. Why is it going up? Why is it going down? You guys could do some research on that. And I know like yesterday and Tuesday, it was about the whole Fed interest talk and how that could affect the stock market. Fortunately, it didn't affect too much for better or worse. So it's a baby step, small step at a time, small investment at a time, small money at a time. So that way you get to learn and you can mold yourself to be a better investor. And once you feel more comfortable, you could put in more $100 or more $1,000. So that way you could grow your investment portfolio better. Well, that's gonna be it for this video, guys. Thank you so much for listening. If you have any questions, comment below and I will try to answer them on the next video. If you enjoyed this video, also consider subscribing if you like to hear me chat about my portfolio and anything in general about my portfolio or my experience. And also press that like button if you guys want to hear more about it. If you didn't like what I said or if you don't like the video, you're welcome to hit that dislike button and tell me what I can do to improve. Thank you so much and good luck on stock market. Stock market is still like in that, it's not that reddish couple weeks as it was, but it's still not that great, I think. But we'll see how it goes. Until next time.